Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on NextEra Energy, ticker symbol NEE, which is the next company in my brother's dividend portfolio that I do not own, and we're going to be doing a stock analysis on. So let's get right into it. First of all, we're just going to be looking at NextEra's, second quarter 2021 earnings. So let me zoom in here a little bit more. But the top highlights here, they say NextEra Energy delivers strong financial and operational results. Florida Power's continued investment in the business advanced its customer value proposition with residential customer bills well below the national average, and the addition of 373 megawatts of incremental solar online, surpassing 40% completion of its 30 by 30 plan. NextEra Energy Resources has excellent quarter of origination, adding approximately 1,840 megawatts of renewables and storage to its backlog. So NextEra Energy is headquartered in Florida. They have, Florida Power, they have Gulf Power, and I think they have a subsidiary called NextEra Energy Resources. Yeah, that's what it's called right here. So those are three main, components, but they also have some business up in the Michigan and Wisconsin area as well, I believe. So as it says here, they reported 2021 second quarter net income on a GAAP basis of $256 million or 13 cents per share, which was compared to 1.275 billion or 65 cents per share for the second quarter of 2020. So it'll be interesting to see, what they say about that and why that happened. And on an adjusted basis, the earnings were 1.395 billion or 1.395 billion or 71 cents per share compared to 1.286 billion or 65 cents per share in the second quarter of 2020. So the adjusted earnings were much higher than the GAAP earnings and were, higher than even last year. So all share-based data has been adjusted to reflect NextEra Energy's October 26th 4-for-1 stock split. So yeah, they actually had a stock split last fall. So all these numbers have been adjusted for that. So we're just going to look at some statements from the CEO as well. He said that they delivered strong second quarter results and remain well positioned to meet our 2021 and long-term growth expectations. We grew adjusted earnings by more than 9% year over year, reflecting continued strong financial and operational performance across all the businesses. Florida Power and Light continues to focus on delivering an outstanding value proposition of low bills, high reliability, outstanding customer service, and clean energy solutions. During the quarter, Florida Power surpassed 40% completion of its groundbreaking 30 by 30 plan. Florida Power expects to have installed more than 15 million panels by early 2022, which would put us more than 50% of the way toward completing our 30 by 30 plan in just over 3 years since we initially announced the initiative. For the second quarter, NextEra Energy Resources continued to capitalize on the terrific market opportunity for low-cost renewables and storage and added approximately 1,840 megawatts to its backlog since the release of our first quarter financial results. We remain as enthusiastic as ever about our long-term growth prospects, and we will be disappointed if we are not able to deliver financial results at or near the top end of our adjusted earnings per share expectation ranges in 2021, 22, and 23, while at the same time maintaining our strong credit ratings and, importantly, continuing to reliably deliver for our customers. We continue to be intensely focused on execution and believe that NextEra Energy remains uniquely positioned to drive long-term shareholder value. So this 30 by 30 plan he's talking about, I'm pretty sure that, like he said, is to install 30 million solar panels by the end of 2030. So obviously they're well on their way, and almost 50% of the way there, only at 2022. So that's pretty great to see. They do talk about each of the separate business segments, but I don't want to go through all of those because it is pretty long. But I will look at the outlook, and it says that their long-term financial expectations remain unchanged. For 2021, NEE expects adjusted earnings per share to be in the range of $2.40 to $2.54. For 2022 and 23, NextEra Energy expects to grow 6% to 8% off the expected 2021 adjusted earnings per share. So this translates to an expected adjusted earnings per share of $2.55 to $2.75 for 2022 and $2.77 to $2.97 for 2023. So next up, we're going to look at the balance sheet from the 10K report here, and it's on page 64. So if we go here, we can compare all these numbers to 2019. So the current assets sitting around $7.4 billion, pretty much right in the same range as 2019. And current liabilities right here are actually around $15.6 billion, which are a little bit higher than $13.8 billion last year. And right off the bat, this seems a little concerning because current liabilities are more than double current assets. But I think for utilities companies, they often are financing a lot of stuff through debt, and because they are sort of a regulated monopoly by the government, that's a little bit more allowable and makes a little bit more sense for them. So I think that's generally okay. Obviously, you'd like to see those current liabilities a little bit more in line with the current assets, but I don't think that's a huge deal. And total assets sitting around $120 billion, which is pretty cool. And equity here sitting around $45 billion, which is up around $3 billion from last year. So that's good to see. And also looking at the dividends here, right now, the yields are only around 1.78%, which for a lot of dividend stocks is not that high at all. But their dividend growth is around 12.38% in the last 5 years. And they said in their press releases from the second quarter of 2021 that they hope to keep the dividend growth around 10% at least over the next few years. So that is awesome if you're a current shareholder. And the payout ratio is only 61%, which does go to show that they do have more room to pay the dividend or increase the dividend. And they actually are a dividend aristocrat, having increased that dividend for 26 years consecutively, which is pretty cool. And as always, we're going to take a look at the PE ratio. Right now, it's sitting around 54, which is significantly higher than it has been over the past 15 years. Throughout most of the 2010s, it was around 10 or 15, which is pretty good looking. But as you can see here, their earnings, jumped up in 2017 and 2018 a little bit, and then, they fell off pretty drastically there. So that's why the PE ratio has sort of jumped up since then, and the stock price has just continued to rise. So I definitely want to look at what happened here in 2018 if I was a little bit more interested in investing and was looking to take a much bigger position. So that's something I would want to look at is, why these earnings jumped up and then why they dropped off, and, if that's some long-term effect or if that's, going to go away. And if they're going to be able to, recover to those higher levels, because, this PE ratio definitely seems a bit higher. Obviously, it is a utility, but they are, a bit more, clean energy focused. So it is sort of, more attractive to a lot of investors these days. But comparing it to the overall sector, you can see the average for the sector is around 35, which is still much below that current PE ratio of 57. And same for the regulated utilities industry is 22 there, so still way below NextEra Energy's current PE ratio. And I actually did a video about PE ratio just a few days ago, so if you guys want to check that out, I'll leave a link right up here to that. I talked about the PE ratio and what exactly it means and how you calculate it, and I actually use NextEra Energy's financial results, net income, and other numbers to show an example of how exactly to calculate it. So looking at the stock price, it was up around 2% just this Friday alone on August 20th, which is pretty cool. And looking about a year out, they're still up around 22% over the last year. And 5 years, they've been doing pretty great. They've had some explosive growth over the last 5 years, gaining around 183% in that stock price, which is pretty cool. And as you can see, they're down here, they're currently valued around $169 billion. And, for me, I think that NextEra Energy is, just a little bit overvalued right now. I think it is a great company, and, they're doing some great things with a lot of their renewable energy. And, that's definitely an exploding industry these days and something that a lot more people are focused on. So that's good that they are in that industry and, focused on that kind of energy. But at the same time, I think the valuation right now at $86 a share is a bit high for what I would be willing to pay. In my brother's account, he does own some NextEra Energy, and I think his average cost is, maybe around $75. I think that price is still a little bit high, but at some point, if you want to own part of a company, it's better, in my opinion, to get it at, around a fair price, or maybe a bit overvalued, than just waiting and waiting and waiting. And maybe the stock price will never fall far enough that you want to buy, and it'll just keep going up. So if it does fall, then you can just buy more and lower your average cost, and you'll probably be fine. So for me, I decided to buy some in the $70 to $80 range. So I think the average cost there is around $75 a share. I would love to hear from you guys what you think, the current fair value of NextEra Energy is, and if you're currently buying at these prices. I'm currently not. I think it is a little bit overvalued, like I said, but I just wanted to thank you guys for watching to the end of the video, and I will see you in the next one.